Welcome back to my new show, Michael Brew Real Estate Unlocked. Kind of super excited about today. Now, for those of you that know, I've known Mike for a long, long time. We go super far back, and this is super exciting for me to just have him here on our show. So let me introduce you to today's expert, absolute expert in mortgages, is Michael Rivieccio with Group 1 Mortgage. Mike, thanks for coming on the show.
I love it. Thank you.
So super excited to have Mike here. Mike has been doing our family mortgages for about the past, I would say 15 years or so. He takes care of all of our personal clients. And if you have not had the opportunity to use him yet, you're going to find out today why most of us have already dialed it in and figured out what Mike has figured out to make us look good when we're dealing with our clients. So, Mike, I know I've known you forever. I'm super excited about this. But how long have you been in the mortgage side of the business?
Well, since 2005, generally, I was originally with a bank, and I felt that it was really institutionalized, and not really catering to the customer and the realtors in my market. So I went with Group 1, who's been around for 30 years, and it's a privately held company. We lend our own money. So it's kind of like a portfolio situation where it's all about the client and the consumer and the realtor. So I've been with them for 16 years now, and it's just amazing to see a small mom and pop company grow to 250 loans a month that we do now in the local market. So it's a pretty cool situation.
It is, but there's a reason for that, Mike. So you have seen it all. You've seen like the market evolve and change. What are some of the changes that you see from like how we used to do real estate, mortgage related, and how we're doing it now?
The biggest changes I feel are back in the day before they would give, a police officer and a school teacher, for example, they didn't really look at debt ratios or anything. Everyone was a real estate investor in 2006, 7, and 8. Fannie Mae and Freddie Mac would allow us to go up to 10 homes without checking income, and nothing was documented, and it just had the writing on the wall for failure, and we all have seen what happened. So the good news for the good brokers is when the Dodd-Frank Act was passed, it basically just said, hey, everyone needs to qualify for a loan, be knowledgeable about their rate, their APR, what they're paying for the money, and there was no more games. And what it really did is it whittled the bad people in a great industry out. Like it just whittled everyone out that had to play shortcut mortgage, we called it. They just took the easiest low-hanging fruit. It didn't matter if the consumer was at risk of losing their house at someday. It was just get that deal done, collect your commission, and move on. So those of us that are still in the industry today, very super successful, and we made it through the tough times, and it really just took out the garbage, to be honest with you.
Nice. I like it. I think you're absolutely right. So it kind of cleaned up the industry, so to speak, and now you actually have to qualify for the mortgage.
Yeah, so when everyone says, like Stacy alluded to, that the market has multiple offers and there's no inventory and this and that's two-part, because most of the builders and the banks that got frozen or taken over back in the crash, builders stopped building because there was no money to build. Banks didn't want to back spec homes. So we had a 3-year shutoff of inventory. Well, now when the world turned around the last 4 years, we're seeing this ample inventory or lack of inventory because the supply and demand just didn't weigh out. There was nothing built quick enough, and they can't build quick enough to catch up. So, and this go around, everybody had 2 years of returns, pay stubs, and they could actually afford the property they're buying, even in a down market. They could still make that payment because everyone was like overqualified the last 6 years since the Dodd-Frank Act. So, we'll see a normal foreclosure turn soon in the next 18 months, but it's just going to be because of businesses, slowdowns, divorces, death. Like the normal reason 15 years ago why people got foreclosed on was life-changing events, right? So it wasn't because they didn't qualify for the house this time. So instead of 5 houses on a block going under foreclosure at the same time, like 2008, 9, 10, you'll have your one divorce situation where that one will go, but the other four will be fine because they are qualified to buy the house.
Well, so that brings us to a great point, and you're right. I remember we were all wannabe investors, right? 6, 7, and 8. Everybody got in the game because it was the best game in town. I mean, I remember like anybody could qualify and anybody could buy a house. So it's kind of neat that we went through this 6-year tighten up, and I remember feeling it. I remember hearing about appraisals not coming in at value, and it really did change the dynamic of our industry some. So thank you so much for being a part of it and being one of the good guys who made it through and always shining. But I think what makes you brilliant, Mike, is the fact that you are so in tune with the different programs and what it takes to qualify for those programs. And I know you don't have time to tell us all the ins and outs and the intricacies, but what would you share with us about some of the programs being offered today that might make sense for the climate and the market that we're in of the now?
Well, my biggest recommendation to all home buyers is to get ready. You don't just go buy a car now. You actually research the gas mileage. You check 3 dealerships for the same car. You pick out, you want a Tahoe, you want an Expedition. Like, you know what you're getting into. So most of the people now are prepared to walk in my office saying, I want a 30-year fixed. I want my payment to be $2,500 with taxes, insurance, and everything. And they give me, an arsenal for my gun to say, perfect, you qualify with your pay stubs at XYZ amount. So my biggest advice to compete with multiple offers and all the stuff going on with the market the way it is just be prepared first, so that when you do go with Michael or Stacy or any of our awesome Compass principals or agents, you have the opportunity to go to that house, see it on a Saturday, and pull the trigger because you were ready 2 weeks before, as opposed to loving the place, and then you end up being able to afford it, but you weren't ready, and 5 other offers got put in front of you because you weren't ready. So that's the biggest change I found with the situation we're in due to multiple offers and lack of inventory and cash buyers, like Stacy said. I've had clients beat out cash offers a ton of times because we were super over prepared. Like, when they went to see the house, they would call me at 11:15. They saw the house at 11. I'm very proactive, so I would call whatever agent had the open house. I would call them directly and say, this is Mike from Group 1. I've been around for 17 years. I'm sure you know of my reputation. We're a small town. Mr. and Mrs. Smith submitted all of their credit application. I have all their tax returns documents. The pre-approval is an approval. I already have an approval for their loan. It just has to appraise and the title has to be clean. So it's like a cash deal. Please give us the opportunity to get this house for this family. So being prepared, I would say, is the number one thing to offset the situation that we're in with multiple offers and stuff like that.
So I like it, Mike. That's great advice. So if you know you're shopping for a home, you know that this market's going to be super competitive. One of the best things you can do is contact you, get prepared ahead of time, not only make application, but also work through the stipulations and the requirements of any documentation required, so that you, if I'm hearing you correctly, you actually go above and beyond. You reach out to make sure that you're connecting with the agent on the other side, reaffirming the buyer in the deal and the buyer's, how solid they are to actually make this approval happen. That is fantastic. It's actually something I have not heard from anybody in the industry so far. Now, you've probably seen, as I have, a lot of changes in the real estate market leading up to the market of the now. Now, what do you think some of the biggest changes that we're seeing from years ago, to today?
The biggest thing that we've seen, honestly, is the government interaction, which I don't like. So Fannie Mae and Freddie Mac are the two biggest entities that were taken over by the government in the crash, which backs the banks on 30-year fixed paper, which means the banks feel comfortable writing 30-year fixed mortgages because they're backed by Fannie Mae or Freddie Mac to a certain percentage. If they go bad, the bank's made whole by this insurance or by the backing from Fannie Mae, Freddie Mac. What I've found the biggest change is my bank, we do portfolio lending, which means we hold the paper. We don't care if Fannie Mae or Freddie Mac backs us on some of our loans. It's just an outlet for that one buyer that, let's say, has a ton of assets, but they just retired and they didn't want to take their retirement yet. We have asset distribution loans where I can just pretend like they're taking a monthly payment from their $2 million IRA or whatever. And so I have different products to where I don't have to follow the 9 checklist rule that the government put out for us. I can just do a make sense loan portfolio that says John Smith really could buy this house cash, so we don't need to worry about all these side rules. We can just underwrite it as an asset depletion loan, and there's all kinds of other stuff I won't get into. But the biggest change is the smaller banks like me pivoting from just selling to Fannie Mae and Freddie Mac and following that rabbit hole, and either you fit in the box or you didn't, to me and my company now finding not loopholes, but ways to get a deal done that don't follow the Cracker Jack box, has to be this way, or you don't get the prize. So that's the biggest change, is that we've evolved with good credit, good assets, and an opportunity to get people into homes that 6 years ago you either fit in that little hole or you were a round peg and that was it for you. So that's the biggest change I've seen.
Well, thank you for that, Mike. That was excellent. I'm looking at some of these new strategies that certain agents and their mortgage broker partners are doing in a combination with each other to win and be strategic in the multiple offers. Because we're hearing time and time again that most properties right now, if it's priced well, looks great, and it's got the curb appeal that's necessary, it's probably going to go first. And by first, it means there's usually 7 to 10 people who are shopping in that price range, kind of hunting, if you will, to see something like that come on the market. What are some things that you could maybe give us, or what you're willing to share with us at this point, to kind of help secure those multiple offer bids?
Like I said, I'm going to retract back to being prepared. I have a ton of agents that work with me. They know, like, and trust me, and I tell them, hey, don't show them anything until they're like approved. I have the four pieces of information. I have their credit, I have their income, I have their debt ratio in line, and I have their willing and ableness to pull the trigger right away. Because for the next 12 to 18 months, with this supply being so short, we're going to be in an opportunity where they're going to get disgruntled and disappointed, because if you're not prepared, you're going to miss out on every single property that you love.
So, Michael, I want to say thank you so much for coming on the show today. I kind of feel like I did something good, because I'm unleashing my secret weapon, or one of my secret weapons, which is you. And I know you've always get it done for us, and we want to say thank you so much for that. Thank you for coming here. You're a mountain of knowledge. You know the programs in and out. If people were to get a hold of you, Mike, what would be the best way to contact you?
The best way is my direct line. I have a lot of staff, and everyone monitors that phone every hour. It's 561-262-6170. Or you can find me on the web at group1mortgage.us. It's spelled out GROUPONE mortgage.us. So call me with questions. Not if you have a deal right now, great. But my biggest helps me sleep at night is to have someone that's like borderline can buy a house, but then I coach you for a month or two with paying your credit card down to a certain limit so your score jumps 20 points. So you get a better rate, how to save a little bit. I have customers now that I've worked with for 4 or 5 months. Their credit's fixed. They've saved 15, 20 grand, and they're in the market back with the realtor where they couldn't buy 6 months ago. Now they're going to be under contract this weekend, a couple of them, on properties. So I'm in it for the long haul for you, to get you to know, like, and trust me. And at the end of the day, If you buy something now or a year from now, I did my job.
Awesome, Mike. Thank you so much for coming on, man. I really appreciate it.
Mike.
All right. Well, hey, guys, this is another wrap of Michael Brew, Real Estate Unlocked. Stay tuned to what we're bringing next. Some of the stuff that we're going to be bringing to you is going to shock you.